Ready to pass the CPA exam faster? Visit cpapass.ai. Today, why expenses always decrease net assets without donor restrictions. To master not-for-profit accounting under FASB ASC 958, you must understand how expenses are classified. We look at expenses in two ways: functional classification, which tells us why the money was spent, such as program or supporting services, and natural classification, which tells us what was purchased, like salaries or rent. Regardless of these classifications, there is a golden rule. All expenses must be reported as decreases in net assets without donor restrictions. Let's explore how this mechanism works. Under current GAAP, net assets are simplified into exactly two categories: net assets with donor restrictions and net assets without donor restrictions. A major examiner trap is confusing the what with the why. The what is the natural classification, like rent or utilities, while the why is the functional classification, like program services or fundraising. Candidates often get tripped up here. Remember, because the NFP entity itself executes the transactions to fulfill its mission, the actual expenses must exit from the unrestricted pool of resources. Use our mnemonic: expenses exit without donor restrictions. Expenses never directly decrease donor restricted net assets. Today, to spend donor restricted money, the NFP must use a two-step reclassification process. First, we move the funds out of the with donor restrictions column and into the without donor restrictions column. This is done using an account called net assets released from restrictions. Second, we record the actual expense entirely within the without donor restrictions column. Think of this like moving cash from a locked safe, representing restricted assets, into your active wallet, representing unrestricted assets, right before you hand it to a cashier. The safe is unlocked first, then the cash is spent from your wallet. Let's look at a mock statement of functional expenses, which is presented as a matrix. The rows show the natural classification, representing what was spent, such as salaries, rent, and supplies. The columns show the functional classification, representing why it was spent, divided into program services and supporting services like management and fundraising. At the bottom, the total expenses flow directly to the statement of activities as a decrease in net assets without donor restrictions. This matrix ensures full transparency, showing both the nature and the purpose of every dollar spent by the organization. Now let's address an exception that leads to a major examiner trap: failing to recognize the simultaneous satisfaction of restrictions. If a donor restricted contribution has its restriction met in the very same reporting period it is received, GAAP allows a simplified path. The NFP can adopt an accounting policy to report these contributions directly as support without donor restrictions. This bypasses the multi-period reclassification process entirely, yet however, the NFP must apply this policy consistently across similar transactions. Even under this simplified policy, the ultimate rule remains unchanged: the expense still decreases net assets without donor restrictions. Let's review the critical examiner traps to secure your points on the FAR exam. First, never confuse board-designated funds with donor restrictions. Board designations are always classified as without donor restrictions because the board is not an external donor. Second, avoid double counting revenue during reclassification. Reclassification is merely a balance sheet shift between columns, not new revenue. Finally, remember that expenses always decrease net assets without donor restrictions. To master these concepts and practice realistic simulations, head over to cpapass.ai for targeted multiple choice questions and task-based simulations. You have got this.